big pots of DC capital have also signed the Mansion House Compact, which is an intention to allocate 5% to unlisted equity by 2030. And so a lot of these master trusts are really thinking through their investment proposition to the market and how they will allocate to illiquids or private markets for the benefit of their members. Everybody is talking about private markets for the DC pension community.
Yeah, there's I guess a bit of a mindset shift required because of the intense focus on costs, which I think is probably justified given that historically it's been a massive issue or determinant of returns, and with particularly like so-called active fund managers and the equity markets taking a fee for doing something that pretty much anyone can do with their own SIP. And so that would make a focus on costs in that context makes complete sense. But a focus on costs to the exclusion of the risk-adjusted return picture when you're looking at private markets suddenly looks more, well, it's just like not comparing like with like.
I think that's exactly right. I think the focus on cost in DC specifically, you had the charge cap of 75 basis points, and I think it did a great job in terms of keeping everyone honest in terms of their fees and protecting those kind of DC pensioners. But I think also the behaviour that then it created was this sort of race to the bottom on fees. And again, as I mentioned, these master trusts are commercial and wanting to win business, and sometimes it can come down to a couple of basis points. And so there has been a lot of focus on what is your investment budget. Where are you going to spend those basis points, and what asset classes are you going to allocate to if you're trying to keep costs low? And I think that was identified as one of the key potential obstacles to actually people allocating to these types of asset classes that are inherently more expensive than say kind of equities and fixed income.
If you stand back, that's crazy, because the whole point of investment is to speculate to accumulate. The more you invest sensibly, the more you get back. And if all you're looking at doing is keeping your costs low, it's a race to the bottom.
I think that's exactly right. And so it's a big industry focus to really shift that discussion from cost to value,
right.
And what can we do to have better member outcomes net of fees.